So guys, this is a new series from me, and we'll be going over some trade ideas. Today I've got a little intuition for you guys in terms of trading. I want to show you guys my trade ideas. So basically, I've been doing some back testing as of recently, working out why I've been losing some trades, and with my strategy, I just want to go over what exactly to look at, right? So guys, we see that we move in a indication, correction, continuation phase. So we'll have an indication. This is our previous high. We indicate above that we are bullish, and then we correct below the previous high, and once it breaks above that again, that's when we enter our trades. So as of recently, I've realized that I've been entering trades on rather the lows, right? With lows in a bullish trend and at the highs in a downtrend. So the problem with this is we don't know how long the correction will last or if it will be a reversal, right? So that's the important part about waiting for the high to be broken. So I want you guys to look at something very specifically, right? Above this high, right? We made at this high, so here was a previous high and we broke it and made an indication, right? So at that indication, we did make some sort of support. So now if you had taken this coming down here as the correction entered off of this low right here, which is a support zone of the previous high as well, it is very tempting, but that is not the strategy. The strategy is to wait for it to correct even below that low, right, and wait for it to break that low again, because we know when it breaks that low where it's heading to, we don't know if it's gonna move off of the support, but we do know when it goes back above that high, we will be trading upwards. So what is very important to look at, there's a very fine line between waiting for it to go to the support and waiting for it to go below the previous high and then back above. That is a very fine line that has been going against me in my trading, and I'll be the first one to admit, but that's the beauty of it in terms of working on your craft, right? So let me make a clear example of what I'm talking about, right? We had a high here, right, and we broke that high as an indication, right? In the indication, we came all the way to this level. So now if you waited for a correction and bought off of this point right here, which is a support formed by this previous high and this previous high, depending on your stop loss, you would have been taken out, right, because price actually went below that. Now what you should have done is wait for price to come back below that previous high first, right? And then once price has broken that high once again, we know that it will go here based on the previous movement, because last time right here when price went above this price went there. So now we have to wait for it to come back above this price so that price can smash that previous high, right? There's a very fine line here, guys, so I would just want you guys to go over what I said one more time and try to grasp what I'm saying. So now what we see now is a trade idea, right? And in real time of what I'm trying to explain, here is another example of where that could have went against you. We had a break here of a way more previous price, right? Price went above, right? And now if you had taken this right here as your correction and bought off of this support, you would have just simply gotten taken out, right? You know why? Because we didn't wait for price to come back above this high, which came from this indication came from this high. So that's the high that we wait for to enter upon, right? Here is not an entry point because price will not come below that high again. So even if price does go up and smash this previous high, it wouldn't be a valid trade in our trading strategy because it does not meet our requirements. We have to wait for price to come below this high, and once it goes back above is when we want to enter and target this high right here. So very intricate idea, very complex, and complicated, but you guys need to grasp this because these are the intricacies of trading. These are intricacies of your strategy. There's very fine lines, and those may go past you, and they may put you in a losing streak like I have, right? And it's important that we go back every day and you analyze where you're wrong, because with that, maybe you won't realize over a couple of days or a couple of weeks, but when you finally do, it is so valuable, because then you'll start losing money and you'll be able to start trading your strategy well and start making money again, right? So that's the whole point of this video. I wanted to go over with you guys, and I'll give you another trading idea. And right now we're gonna wait for price. Let me draw a path for you guys. All right, we're gonna wait for price to come back below this zone, right? If it retests, doesn't matter, right? But once price has done that, and then whatever it does, consolidates, creates support, we don't care until price is above this zone again. You know why? Because when price made this indication, it was above this zone, right? So we'll only be interested once price goes below this zone, and then once it goes back above is when we want to start looking for entries. And the important thing with this strategy is it's a breakout strategy. You're not guaranteed to get a retest, right? So you need to be vigilant. You never know, it could come in early London session, just before London session, could be New York, late New York session. So it's up to you to stay vigilant. And yeah, where we put our stop losses is based on the correction, right? So let's say this was the correction moment, right? And we wanted to enter here. If price reversed here, that would be our low. So if price goes back above there, we want to put our stop loss at this low right here. Reason being is that if price creates a low and then makes a retracement and now goes to break that low again, that is a characteristic of a bearish trend. Therefore, price would perfectly take us out and tell us that now we are in a downward trend, which is very perfect for us. We limited our losses and we can go back to the drawing board. So as you can see, if we were to do that, we'd have a really good risk to reward ratio of 4.5, 16 pips, 15 pips, not too bad for a 70 pip target. Guys, that's it for me. I'll keep this video short, and I'll see you in my next trade idea coming up very soon. Thank you.